we're here this evening to talk about financial health. We at Momentum talk a lot about actually financial wellness, which I think is really closely related. I think there's a really strong relationship between what we're discussing this evening as financial health and what we talk about as financial wellness. And we've just launched, with the help of Team Spirit, it's been fantastic, the 2017 Financial Wellness Index, which we've carried out in combination with Bristol University, who've done a State of the Nation piece. They are really well regarded as the Personal Finance Research Centre in Bristol is very well regarded in terms of their academic qualifications and their academic experience studying financial situations in the UK and looking at how everyone kind of fares. And we've actually just finished that. It's the State of the Nation, breaking down financial wellness by region, by demographic, by home ownership status, and by a number of other factors. And I think there's a lot of findings from that report which ties really, really interestingly to what we're talking about this evening. So, first of all, financial wellness, we define that someone is financially well, which is actually very similar, I think, to what Anna was saying. Someone is financially well when they can afford their planned and unforeseen expenses, both now and into the future. And there's a couple of interesting points there. One is planned and unforeseen. So it's not about, I want to buy that boat, let me save up for it, or I want to buy that expensive car, or whatever it may be. And the other is now and into the future. So it's both short-term and long-term. So being financially well isn't just about how much money you earn, or it's not at all actually about how much money you earn, or how many times you go on holiday each year, or whether you drive that fancy car. It's a wider look at your financial situation. And I think that there's a really strong relationship between what we regard as financial wellness and what we're going to have a discussion about this evening, that is financial health. So the overall state of the UK, why did we look at financial wellness? And also, I think, why are we here this evening to talk about it? What is the problem? Well, there's some quite shocking stats, actually, which is that the average adult in the UK pays just over £1,000 in interest each year. This isn't interest they've earned from savings, this is interest they're paying on debt, so credit cards and loans, etc. The majority of people in the UK are financially exposed. So Bristol worked with us to create 4 categories of how financially well you are, from financially well down to the second best, which is financially exposed, financially unstable, and then all the way down the scale. The majority of people in the UK, so over half, are what we call as financially exposed. So they're kind of doing okay, but there's shocks which could really impact their financial situation and cause a bit of an issue for them. And that's the majority of people in the UK, over half. About a quarter of the UK, or in fact almost a quarter of the UK, our research shows, have less than £100 in savings. This is something which was backed up rather, for us unfortunately, but for the data very fortunately, by another big player in the market at the same time. And we've also heard this stat, slightly higher in fact, mentioned earlier this afternoon. But the fact that it's there is huge, you know. Savings are an important cushion to protect us against issues. And savings don't pay. So those that do have savings, right, 97% of savings accounts on the market don't beat inflation. So those who have done really well, put some money aside, they've got their savings, they put it in a bank, they've left it there for 10 years, 10 years later they've actually lost money because inflation has eroded their savings. 97% of savings accounts, right, not accounts, savings accounts. And the financial landscape is changing. So PSD2, for those that you know what it is, you'll be very much aware of this. For those that don't, it's a fundamental shift in how people access their data. So it's about the free flowing of data from where it's typically held, so banks and financial institutions, and allowing individuals to access that data wherever they should choose, is going to fundamentally change the financial services landscape, right? So there's a lot of factors which mean that this evening is actually a worthwhile conversation to have if we didn't think so already. A few stats on the back of the financial wellness report, and I'm going to keep to my 5 minutes, honestly, there's not too many slides. So we already, again, heard earlier that there's a strong relationship between financial wellness or financial health and physical health. And our data absolutely backs that up. So 39% of people who are in excellent health, who self-declare excellent health, are confident about their long-term financial situation, versus 18%, so less than half, of people in poor health. So 3/5 aren't, in general, but let's ignore that for a second and say 2/5 are, less than half of people in poor health. So there's a really strong correlation there. There's a relationship between how people eat and their health, and their financial health. So people who feel that they don't eat enough healthy food are twice as likely to have been unable to pay a bill. And one of the facts which I find quite shocking is this 5%, bottom middle, 5% of healthy people struggling to pay bills. of healthy people, struggling to pay bills versus 17% of people who are not healthy. So more than 3 times those who are unhealthy are struggling. So what we saw is this really, really strong correlation between financial wellness and health. And I think we discussed it earlier, and hopefully we'll discuss it a little bit more, but it really highlights the importance of the conversation we're having. It's not a standalone situation where you've got your finances where you're really struggling. That's going to impact your overall life, essentially. And then some sort of wider stats, which I thought were quite interesting. So Cutback Britain, this is what the slide's called, but we saw 39% of people who responded to our survey. Well, it wasn't a survey, it was actually a face-to-face research of over 2,500 people carried out individually on one-on-one sessions, so it's very, very deep, the data here. 39% of people, so 2 in 5, have cut back on something. 2 in 5 people in the UK have cut back on something to make ends meet. We've seen 16% have gone without holidays, 15% have gone without socialising, and crazily, 12% have cut back on food. So there is an issue here, and I'm looking forward to talking a little bit more about this also, because we've got a problem, and I think that fintech and also more widely we can change this and we can impact this. But there's no arguing with these numbers. There's an issue that we need to deal with. But it's not all bad news. I kind of wanted to end on a little bit of a high. How can fintech help? And you can replace fintech perhaps with financial evolution or financial change, because I totally agree with your point. It's not just about technology, but how can fintech help? Here are my thoughts. PSD2 and PFM, which stands for Personal Finance Management. PSD2 is going to be really, really big. People are going to be able to access their financial information wherever they want to. And as we move forward, actually make financial transactions and inform their finances from wherever they want to. So using apps or using other services, you don't have to go to your bank's app or your bank's site to make those changes. I think that's going to make a big difference, or it can make a big difference, because one of the issues right now is that people don't really understand their financial situation. And anything we can do to help people understand their finances better has to be a good thing. You know, the first thing to solve the problem is understanding and realising you have a problem, right? So for those individuals, this is going to be really, really helpful. And even if you're doing fantastically well, being able to understand and digest your data in a way that you want to is really a good thing. And I think that leads to access to advice, kind of brackets robo. Robo advice is a term that's really scaring IFAs at the moment, and also a lot of investment houses. And the regulator's saying, no, it's a great thing, but actually no one can do it because otherwise you're going to get sued. But no, we support it. But the whole robo advice thing, I think advice has typically been accessed by people who can afford it and who IFAs are really interested in giving advice to because they can make money. And we're kind of post RDR, so you can't sort of hide the commissions you're making. You need to make it really obvious. So the impact of that has been IFAs have gone, we don't want to deal with those guys who aren't going to have over 100 grand or 50 grand at the lowest end. Deal with yourself because there's a liability. We'll deal with you lovely rich people because you're fantastic and you make me loads of money. Which means there's a whole load of people over here in the advice gap who are struggling. And technology can really, really help that. Algorithms, smart tech in combination with PSD2 can provide some solutions which are really going to be beneficial for these individuals. Access to products previously limited to certain groups, we're already seeing this to a degree. As mentioned earlier, 97% of savings accounts don't pay above inflation, which means people need to start looking maybe at investments. Investments aren't for everybody, but they are a way forward for a lot of people who may not have considered them previously. And again, investments typically, well, I don't know what I'm doing, I don't want to get involved. Do I buy shares in one place? Do I buy a fund? What's a fund? What is this I'm reading? I'm scared, I don't want to do it, I'll go back to my bank. And I can't speak to an advisor because an advisor's not interested. PSD2, in combination with some robo-advice, can actually help people start accessing products which they may not previously have. And it's not just investments, it might be bespoke insurance products, right? Which uses technology to power those algorithms and actually provide somebody something which is quite bespoke, which previously may have only been available to somebody who was very well off. And then we're talking about financial health, so I've called it simplified good financial hygiene. But I think this is really important. Budgeting, savings, and choosing suitable financial products. These things are actually quite difficult. I mean, I'll be the first to admit, love that you've got a question. I think we've got questions in just a second. If you just can hold on to it for 2 seconds, I'd love to answer it. I think I'll be the first to admit, when it comes to budgeting, I'm bloody awful, right? And I'm sort of jetting around the place, doing a meeting, going to the pub, get to the end of the month, oh crap, is that my bank balance? And financial products can really help with that. Same with savings, saving is quite difficult. We've already talked about the savings issue, and we'll hopefully discuss that again a little bit later. And then choosing suitable financial products. So it's not just a comparison site where the cheapest is listed, it's this robo-advice thing, where actually people understand that this product may be a good fit for them. And I think this is really exciting, because we've moved from a situation where people are talking about this to a situation where people are beginning to do this. But, I said it ended on a high, but there's a but. Regulation. This is a big issue, and hats off to the FCA. They are sandbox and engagement with businesses who are looking to challenge the way that things are developed at the moment. It's still a massive barrier. Our old CEO was speaking to an incumbent major player in the investment space who developed a fantastic robo-advice product, and they scrapped it at the last minute. This is last year, because they were so scared about getting sued, and they thought, we'll just stick to our bread and butter. That's a bad thing. That's a bad thing. And then support for growing businesses. We all know how this market is dominated by incumbents. Support for growing businesses, which we've already heard a little bit about earlier, is fantastic. Because innovation and new ways of thinking and challenging established norms tends to happen from the outside in. And it's that crazy person in the corner that says, why don't we do this? And everyone says, that's a crazy person. But that crazy person occasionally needs to be listened to, right? Because they're going to challenge the way you think and challenge the way you do things. So we need to do more of supporting young, growing organisations. Thank you very much.